What is up, everybody? Hope you guys are all having a fantastic day. Long time no video. I have a ton of content for you guys today, though. The Swift network, live with blockchain and digital assets as of 2 days ago. Found the documentation confirming that. We talked about this back in July. Found the follow-up documentation this morning that was just published over the past couple of days here, so I will go through that with you guys. Bank of Thailand, Central Bank of Thailand, putting out some interesting verbiage around level playing field. There's a lot of level playing field verbiage today that has just came out over the past 2 or 3 days. But also mentioning Ripple. And mentioning Ripple in a way that is very interesting from a verbiage standpoint, for me at least. I want to start this off, though, with obviously feel for anybody that lost funds through FTX, X, Y, and Z, all the other aspects, and the cascade effect that's occurred over the past couple of weeks here. But it's almost like perfect timing for me, which is a little bit curious, because we kind of see, this huge collapse. If you've been paying attention, FTX was, I don't even want to say it was managed at all from an accounting standpoint. I mean, they were running stuff off of Excel spreadsheets and business deals on napkins. The dude was playing video games while he was taking on funding simultaneously, which is, you could consider that multitasking, but I consider that a little bit ridiculous. And some of the investors into Alameda and FTX include the likes of BlackRock, etc. So it's just very interesting that this all occurs, and then we see this narrative coming out from these major players. So you can look back months ago, crypto billionaire Sam Bankman-Fried, I got involved with no clue what a blockchain was. And then even the new CEO of FTX, John J. Ray, FTX is worse than Enron. And then you get into, well, this is Gary here, but there's a huge document in the New York Times today about curbing, I don't know if it's about curbing innovation or not, probably if it's coming from anything dealing with Gary, but it's a long document coming out of the New York Times today about the campaign to rein in the crypto industry. Ripple's mentioned in here. I'm not going to give Gary more than 30 seconds, though. And then you get into the narrative shift from these central banking entities and governments directly on the heels of this FTX aspect. And I just think it's very interesting timing-wise. I'm not going to put my tinfoil hat on today. I just find timelines a little bit curious as far as how this went down, how crazily mismanaged FTX and Alameda were. And then you kind of start seeing the governments and banks coming in saying that they are going to be the saviors of this industry, which is a little bit acidine. Crypto exchanges bundling of services threatens stability, says Bank of England official. Crypto rules needed after FTX collapse. It's the perfect storm for this regulatory regime that I think that these banks and these governments are going to try to put in place. This is the entire speech here, Reflections on DeFi, Digital Currencies and Regulation. It's a speech by John Cunliffe. I think this was just released today. You could see even the rhetoric shifting from crypto is bad, central bank money is good, and we do need to shift towards digitization of our fiat currency, digital pound, etc. Even to the extent that Joe Biden leading a quote-unquote critical call for game-changing global Bitcoin and crypto rules and regulations after the shocking FTX collapse. All right, we're going to get into that, what Joe Biden said in the G20 document here. That's through the Bali Leaders FinTech, or Bali Leaders Declaration coming out of the whitehouse.gov. But if you've not been paying attention, same time frame as the FTX collapse, there's a digital dollar proof of concept going on that's lasting about 12 weeks between heavy hitters such as HSBC, MasterCard, Wells Fargo, etc. There's more within this as well. This came out about a week ago. They're framing this or calling it the Regulated Liability Network. All right, now, this is where it gets a little bit interesting. We're going to get into the Swift stuff in a second here. Bank of Thailand is somewhere in here as well. But this is from the whitehouse.gov, briefing statements from the G20 Bali Leaders Declaration. If you're not aware, G20 participants are Argentina, Australia, Brazil, Canada, China, France, Germany, India, Indonesia, Italy, Japan, South Korea, Mexico, Russia, Saudi Arabia, South Africa, Turkey, the UK, the US, the European Union, and Spain as a permanent guest. It's an intergovernmental forum, right? They have an entire section here on same risk, same rules, same regulation about crypto assets, especially from the exchange standpoint and the way that a lot of these money transfer service or crypto companies operate. And that is the way that, in my opinion, this probably ends up shaking out. Because I do believe that these centralized exchanges dealing in cryptocurrencies are going to be essentially like the banks in the digital economy. They're certainly going to tie in and interoperate with traditional banks. And some would argue at some point in time, we may see kind of a shift over from traditional banking into centralized digital asset exchanges. But I think that we are a very long time away from that. I think that there's going to be kind of this meshing of the old guard and the new economy coming very, very soon. What they talk about, though, is a couple of interesting terms here. Supervision and oversight of a quote-unquote or of quote-unquote global stablecoin arrangements. You can think whatever you want to think within that, but there's a ton about level playing field as well. Strengthen regulatory outcomes and support a level playing field. That's not the only time that I saw level playing field today, and all of this has come out, I would say, over the past 2 or 3 days here, all this documentation. This is the Central Bank of Thailand. Thailand's digital economy needs to focus on principles of inclusivity, productivity, and resiliency to enable innovation for all and promote a level playing field. So that's 2. Also within this, they literally, this whole thing is about about Thailand moving to the digital economy. This entire document here. What I found interesting also within this, they directly mention Ripple, and this is part of this overview down here. It's a hackathon, but then it's beyond traditional finance and a key summary, unleashing opportunities for digital finance. They talk about digital technology up there, bridging the gap between traditional and digital finance with blockchain. Now, I found the last sentence of this very interesting, and I'll tell you why. Ripple's mission from the beginning was to transform the way value is moved across borders, especially in emerging markets. One of Ripple's early use cases of payments is cross-border remittances. Ripple's blockchain cross-border payment solution has massively improved the lives of foreign workers, whose major financial priority is to send money back and home from their family. Moreover, Ripple's on-demand liquidity service has enabled, which ODL obviously can use XRP, on-demand liquidity service has enabled instant movement of value through blockchain, releasing idle capital across markets and improving cross-border treasury flows. Playing the middleman role between financial institutions and the innovative frontline crypto-friendly institutions, Ripple believes that cryptocurrency and fiat money will coexist for a long time. That should ring a bell to a lot of people because, you hear kind of the narrative that stablecoins and CBDCs are going to kill things like XRP. Now, this is just from Ripple's standpoint, but we can also go back probably a handful of months. Brad Garlinghouse was interviewed, and I believe he said he doesn't understand why there's multiple different stablecoins. Why not just digitize, central bank money? It's just interesting, the narratives, and this is, hearing this from the Bank of Thailand. So we know, at least from Ripple's standpoint and their dealings with the Central Bank of Thailand, that they're still coming across with this narrative where fiat money and cryptocurrency will continue to coexist for a long time. I don't know if there's ever been an official announcement with the Bank of Thailand and Ripple as partners. I do know that I think Siam Commercial Bank and there's a couple of other ones that are prevalent in that area. All right, so we had level playing field. We had, and this, by the way, is this just came out over the past couple of days. This conference was the end of October, but this document just came out probably over the past 2 or 3 days here. We have level playing field. We have digital assets. We have kind of a random throw-in of Ripple within this as well, bridging the gap between traditional and digital finance with blockchain. All right, now we also have the Office of the Comptroller of the Currency. And again, banking services treated fairly, as well as to help maintain a level playing field as the industry evolves. This is talking about digitization, banking, bank fintech partnerships. Now, if you're not aware, the Office of the Comptroller of the Currency, I did a video probably in early 2018 about them trying to push through special purpose, non-depository institution, essentially banking charters for fintechs, which we've seen some really interesting stuff in the past coming out of Ripple, where there was an interledger document that had the word bank underneath Ripple. It said like for e.g. or for example bank underneath the word Ripple, and we know that they've been trying to push across this kind of and again, this is all tying into the same verbiage as far as what's being presented from a regulatory standpoint. They're talking about same risk, same rules, same regulations. I would not be surprised if some of these banking or some of these blockchain companies, when we start having some clarity here, do get regulated and do operate as banking entities. So that'll be really interesting to watch, check out. So we have level playing field again. All right, again, more G20, and then we see level playing field. This is about ongoing work with the Financial Stability Board and international standard setters to ensure that the crypto assets ecosystem, including so-called stablecoins, taking a dig at stablecoins there, are closely monitored and subject to robust regulation, supervision, and oversight to mitigate potential risks to financial stability. Crypto asset activities and markets critical to build public awareness of risks, to strengthen regulatory outcomes, and to support a level playing field while harnessing the benefits of innovation. So I think that's 4 or 5 level playing fields that I got from the past day or two. European Commission coming out of the European Union. The review is structured around 4 main themes: scope and coverage, consumer protection, open banking, and the level playing field between banks and non-banks. There we have level playing field again. And then we actually have the Financial Stability Board aspects talking about level playing field also. And crypto is in every single one of these documents that have been coming out. So like I said, I just think it's very interesting, almost like the perfect storm, the perfect narrative with the FTX collapse for these banks and governments to come in and say, hey, we're here to save the day. You and I understand that. I don't know if that's going to be the case. I don't know if this space goes in the way that we need it to go. But I do think that there's going to be regulations. I think regulations that support innovation need to come into this space, and I hope that they just do it in the right way. All right, moving forward, SWIFT, published 18th of November, 2022. You can see it right there. Both of these. This is SR 2023 Business Highlights and SR 2023 Updated High-Level Information. First and foremost, impact on all Category 5 messages. This is for SR 2023, so standards release that has not happened yet, but is happening next year. But there already has been some stuff that had just happened over the past couple of days. We'll go through that in a second here. One of the things that is being proposed for next year is this right here. This is for MT500 type of messages, which I believe are securities transactions. And relieve the restriction imposing the presence of a blockchain address or wallet account number for the usage of digital token quantities. The other thing to pay attention to within this is MT304. MT304 deals in foreign exchange transactions. For example, an asset manager who executed a foreign exchange transaction with a broker dealer would send an MT304 instruction to the custodian bank of the client. So this is to advise of or to instruct the settlement of a third-party foreign exchange deal. They talk about these Category 3 for next year: foreign exchange, money markets, and derivatives. So this is just dealing with foreign exchange. And it's talking about the impact. And everything is a no except for MT304, which I believe is foreign exchange. Address the business need to identify a non-ISO currency in a message. Extension of field to align with ISO 24165, which includes an extra check character for the 8-character digital token identifier. To give you a little bit of background on ISO 24165, ISO 24165 is all surrounding non-fiat currencies globally. ISO 24165 was created by the DTI Foundation essentially to track crypto and to be able to utilize that identifier to streamline crypto identification. The DTI Foundation has proactively issued identifiers to the top 100 cryptocurrencies by market cap. This was back in 2021, thereby enabling all major cryptocurrencies to be tracked through ISO 24165, including Bitcoin, Ethereum, Tether, and XRP. You can see right down here as well, ISO 24165 can be used by investors, exchanges, data aggregators, ecosystem participants, regulators, and issuers who can now submit an application to register a fungible digital token and receive a digital token identifier. So, you can see what's coming in 2023 for SWIFT. But here's what's already occurred. As part of the standards released 2022, the securities messages, Category 5, were enhanced so they can cater for digital asset identification, and new token-related features were added, including the addition of an accuracy number to allow for the granularity needed for fractionalization and the option to use a wallet blockchain address instead of a safekeeping account. They go into what's coming next year, which we just went over. In addition, as part of Standards Release 2022 in the foreign exchange messages, Category 3, support was added to the messages for confirming and settling non-deliverable forwards or non-deliverable FX trades and options in digital currencies that do not have an ISO 4217 currency code. What they are saying there, ISO 4217 essentially is a national currency code. It's a fiat code. The dollar has one, the euro has one, the pound has one. They are literally saying in foreign exchange transactions and options that digital currencies can be utilized for confirming and settling non-deliverable forwards or non-deliverable FX trades. And this is through ISO 24165, which we literally just went over. They have integrated cryptocurrency, ladies and gentlemen, at least the beginnings of it. And this just went live, I believe, a couple of days ago. This was just with the November release. I think it was the 18th of November when this went live. You can do some key searches in here. I think that we covered most of it, though. Let me see if I can get ISO 24165 if there's anything different. No, it's all right within here. So, and these changes, like I said, these are live right now for 2022. And there's more changes that are coming out in 2023 as well. Changes to support market evolution. I wonder what they're talking about. Last but not least, I found this a little bit interesting with all the level playing field verbiage. When we talk about Internet of Information or Web 2.0, David Schwartz putting out all the way back in 2018, the Internet grew largely due to the efforts of the government, the military, and many institutions. But they built a reasonably level playing field that everyone now enjoys providing information to and consuming information on. It's the same model. And that is the same thing that's going on with the Internet of Value. They're talking about a level playing field as far as, number one, standards. At some point, they're going to have to, regulate as well. When you talk standards, you can think ISO 20022. I know that that's not natively attached to crypto. I argue against that on a consistent basis. All the way back here, this is a SWIFT document from 2016. You want to think about how long they've been planning all of this shit. It's right in front of your face. They talk about ISO 20022. And that's standardizing the messaging aspects so that other aspects can be tied into it, certainly distributed ledger technology. Standards in blockchain, castles in the air or in the sandbox. This is Campbell Pride from XBRL, Stephen Lindsay from Swift. Talking about distributed ledger, they do mention, obviously, Ripple all the way back then. This is a Swift document, ledger permission options, who can see the ledger, etc. And then if we get down far enough, it talks about standards that exist now and standards that are going to exist in the future. Distributed ledger technology, blockchain or crypto, and standardization. What can we reuse from existing standards? All the way back in 2016 they're talking about this. And why would we bother? And what might a native standard for distributed ledger technology look like, in parentheses, when the time comes? A new paradigm. And they have ISO 20022 tied into the majority of this as far as business model is concerned. And it's talking about interoperability with legacy processes and systems, etc., definitions and smart contracts, end-to-end. So ISO is certainly a part of this standardization, this kind of level playing field aspect. To give you guys a heads up, with Swift integrating blockchain, and it looks like crypto from the ISO 24165 aspect over the past couple of days, for settling in foreign exchange trades, dealing in non-deliverable forwards. These are essentially an outright or forward or futures contract in which counterparties settle the difference between the contracted non-deliverable forward price or rate and the prevailing spot price or rate on an agreed notional amount. My understanding is fiat is still used, or cash is still used on the front and back end of these transactions. But during a non-deliverable forward transaction, there is always going to be a little bit of volatility. And the DTI aspect, or a blockchain or a digital asset, would be used to kind of settle the difference or the volatility between the cash on the front and the back end. So I know there's a lot of verbiage around XRP going to some ridiculously acidine price overnight just because Swift is live with certain aspects of ISO 20022. I don't even know if any of these tweets have what is actually occurring. And hey, it's all the internet. You can literally find what's been implemented right now. But this is a long game. I have no idea where we're at in the marathon. I do know that Swift has went live with blockchain, with blockchain wallets, with digital assets, with ISO 24165, which is essentially token identifiers for crypto, and that they have not only plans now, but they have plans in the future for 2023 as well, especially in the foreign exchange aspects. So make of it what you will. This information exists everywhere. It's interesting to see this kind of perfect storm, this fall of, crypto as far as these exchanges are concerned, and a lot of fear mongering around this space. When if you really look at it and step back, we've been talking about custodying your own assets for as long as I can remember, not over investing into anything, only putting in as much as you're 100% willing to see go to zero, diversification, adding as many security measures as possible. And I don't know. It is what it is, guys. I feel for anybody that lost money with the FTX stuff. But watch what these institutions and governments are actually doing. They're talking about coming in as the white knights of this space based on a guy that was writing down fucking business deals on napkins. And I just find it a little bit curious that all of that was allowed to go on with especially the investors that this dude had and everything else. I'm not saying when there's smoke, there's fire, but usually that kind of is the case. And it's a little bit curious how all this stuff is shaking out right now. I hope you guys enjoyed this video. I'll talk to you when I talk to you. Bye.